The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Okay, it is Friday the 10th of April. Jeremy, welcome back. Good to speak to you again.
Hi, Gareth. Yeah, good to be here.
And there's been 3 weeks since we last spoke. So there's been a fair bit going on. And you've recently published a catch-up on Q1 overall. And in that, you used the phrase cardiac event. What did you mean by that?
Well, yeah, what's going on in the Middle East and the closure of the Strait of Hormuz is a cardiac event. I mean, hydrocarbons are the circulatory system of the global economy. The Strait of Hormuz carries 20% of the world's oil, 25% of global LNG. And when that closes, that's not a market correction.
It's literally like a heart attack.
It's a heart attack.
Yeah.
What we don't know yet, whether it's a full cardiac arrest. We've witnessed this week that there's a pain point and a time frame which the US political process won't tolerate. And I think that's why we've seen the events of Tuesday, when we were all waiting for Iran to be bombed back into the Stone Age. And of course, at the last minute, what do you know? We had a bit of a taco event.
Yes. But the Americans are saying that Operation Epic Fury pretty much has achieved its military objectives. Khamenei is gone. The IRGC leadership has been figuratively decapitated. The nuclear facilities have been either destroyed or buried under so much rubble that it's almost the same. So why would people say that it hasn't been a success?
Basically, because the regime is still standing. The fundamental problem with decapitation strikes in a theocracy built on martyrdom is that you can remove the leaders, but there isn't a legitimate, acceptable, any form of opposition waiting to fill that vacuum. So the regime is still standing, and the net result is that the Strait of Hormuz is not fully open. Now, some ships went through by negotiation or by good fortune, but what seems to be evolving is this Iranian toll booth model where they can now extract rents from the shipping going in and out of that region. And it is critical and potentially very lucrative for them.
You're right. And it doesn't sound like success from an American perspective, does it?
No, certainly not. And a lot of things have gone on in the Middle East in the last 50 years, including an 8-year war between Iran and Iraq. Pretty much all of that time, the Strait of Hormuz remained open. So, yeah, the choke point has become a checkpoint. And it's not just the export market, it's the import market as well. So countries on the other side of the straits, these countries don't grow much of their own food. They depend on trade. I think one thing to establish is that the Iranians are ideologues and they're militarily aggressive, but they're not stupid. And for them to do the things they want to do, they need to get revenue. And they get revenue principally from selling hydrocarbons to the rest of the world, principally China. And their traffic goes through the straits as well. So they have a vested interest in their toll booth working, but they retain the option, clearly, to use it as leverage against the West. But ultimately, it does seem as though the Iranians are putting in a good show of controlling who goes in and out.
So you compared this to the Suez crisis of 1956. Do you want to talk us through that comparison?
Yeah, 1956 was when Britain and France invaded Egypt to retake the Suez Canal. The Americans basically told them to stop, and they stopped. And in that moment of compliance, the world understood, if it wasn't apparent already, that the British Empire was over. Not because it lost a battle, but because it had to seek permission from Washington before it did anything. Where's the parallel in all this? Well, today, Washington's allies are seeking permission from Tehran to put their ships through this critical checkpoint of global shipping. And we've had this military campaign, and they haven't been able to reopen the straits. So the wider implications of this, I think, is indicative of the decline of the American empire.
So at the end of the day, the US, or more importantly, the US's allies, are having to ask Tehran's permission to send ships through the waterway, which up until a few weeks ago was free.
Yes. The US presence in the Middle East, which has been a feature since the 1970s, is basically based on the architecture that Henry Kissinger put in place, which created what became known as petrodollars. The Arab states who held the oil-consuming world to ransom during the 70s agreed to sell their oil in dollars, and then, importantly, to recycle those dollars through Western banks. And in return, the Americans made guarantees of arms sales and protection to the Gulf states. What is being undermined here is that whole system of mutual support. And Saudi Arabia and the other Gulf states, they can see that the Americans can't guarantee their security in this region.
As well as Suez, you also talked about the term hypernormalisation. Where does that come from, and why would you say that hypernormalisation is relevant here?
Well, hypernormalisation was a period when everyone involved in a society, such as the Soviet Union, the citizens, their bureaucrats, the political leaders, all knew that the system had failed or was failing, but nobody dared to say so. And I think we're now witness to a regime change in the West. Certainly since the collapse of the Soviet Union, the US was the global hegemon.
Right.
And I think we're at a phase now where we're going through a Western hypernormalization. And the events of the last few weeks have accelerated that process.
Okay, and what about China? Where do they fit into this? What do you think they're thinking, and what do you think they're doing?
Well, there's a guy I spoke to recently called David Murren, and he's got a framework he calls the 5 stages of empire. We talked about the decline of America. He sees America at stage 5 in overextension and decline.
Doesn't sound good. Right.
And he sees China in stage 2 in ascension. And ultimately, China doesn't need to fire a shot. It's waiting and watching. And it's watching how Iran has managed to bleed the Americans' missile defenses and economic capital. You've got this asymmetric war going on where a $50,000 Iranian drone can force the US and their allies to fire interceptor missiles that cost upward of $2 million each. So the depletion rates of these missiles that the Americans and the Israelis have been using are huge, and their replacement rate is ultimately controlled by China, because you can't build these things without critical minerals and rare earths. So China is likely to be the silent victor of what is going on in this accelerated period of Western decline.
And defending Taiwan is going to be much harder if all the available ammunition's been used up in the Middle East.
Absolutely. If you listen to someone like David Murren, he doesn't think that China stops at Taiwan.
Right. Sounds like it's very much worth a listen.
Yeah.
Okay. And from an investor perspective, what do you think investors should be thinking? Where on earth can they sort of start trying to get some kind of perspective given what's going on?
The big sector, the big industry that's come roaring back is clearly the energy sector, particularly the oil and gas sector. It's been a huge wake-up call to the world that hydrocarbons drive everything, and not just energy, but plastics, fertilizers, petrochemicals, things that are the basis of pharmaceutical products. It is a very wide base raw material for our everyday life. The oil and gas sector percentage representation in global equity markets was very low at the back end of last year, and that's obviously changed in recent weeks, but it's still at historic very low levels. So if the events of the 1970s are an analogue here, then the rate of hydrocarbon exploration activity that we need to go through in other areas of the world. So, this whole thing around the Iranian toll booth and the importance of choke points in the global economy is highlighting something else that we've sort of talked about on here before, and that's the rise of national capitalism or neo-mercantilism, which is basically around economic self-interest. And so I think you're going to see an acceleration, certainly in Western countries, including Europe, greater state involvement in the rationing of capital and allocating it towards reindustrialization, defense spending, and supply chain security. And that has negative implications in the main for investors in terms of financial repression, i.e., authorities controlling and influencing, if not compelling, where investors allocate their capital.
And so being positioned in things which are either more sort of physical assets or those sorts of things where you've
Yeah.
got some degree of underpinning or genuine tangible safety or security might not be a bad idea.
Yeah, obviously, energy, commodities, precious metals, and towards physical manufacturing of real things again.
What about geographically? Does that pivot also extend to geographies that people are looking at?
I think the whole question of whether China is investable is interesting. While I think the US economy is attractive and growing, it's highly skewed towards the Mag 7. It's highly concentrated in technology and enterprise software companies, which I think the world is probably going to be rotating out of. I think the world's capital is overinvested in dollar assets. Having said that, in a fracturing world where the US is undergoing this Monroe Doctrine, as it's been called, a sort of reiteration of the Monroe Doctrine, where the US is likely to either by choice or be forced back into its hinterland, it probably makes Central and South America a more interesting and secure area of the world to invest in, all other things being equal. I think Brazil, Argentina, these are countries that are commodity producers. They benefit from a weaker dollar, and they're increasingly going to be, if you like, the new Europe, the new NATO. They're going to gain from greater protection from the US defense umbrella.
That's interesting in terms of what people might want to look for in a positive sense. What about the other way around? What's worrying you most at the moment?
It's got to be the bond market, really. The bill has to be paid here by some estimates. Trump's and Netanyahu's campaign in Iran on a per day basis is the most expensive war ever fought in terms of the technology involved. And the battle between policymakers and the bond vigilantes has not gone away. It's just been sort of overshadowed by a military war.
Yeah.
In the period, bond yields have been volatile, but they've largely gone up. Initially, we had this sort of knee-jerk reaction. People went to the dollar for safety. So you've had a pretty volatile day-to-day market backdrop, but the sovereign debt issues are getting worse. They're not getting better. Japan is looking stressed, and we've got an imminent change of leadership within the Fed. So we're a little bit in the dark about what the policy leadership from the Fed is going to be, assuming Kevin Warsh, his nomination gets approved for next month. So it's sort of going into a bit of a storm with the most important job in global monetary policy in transition, which is a bit of an added worry. The global order that we've had since World War II was going to end one day. That's a statement of fact. Empires don't last forever.
No.
And as someone put it, they don't send a memo when they're done either. So you have to work it out. And I think, to bring it back to where we started, I don't think this Iranian toll booth is a temporary phenomenon. It's sort of a data point in a longer term trend. This sort of much messier, chaotic, multipolar world is an inevitable part of our future. How we get there, just like in stock market terms, we don't go from A to B in straight lines, but I think this is the way we're going. And in so many regards, things come back to China. And in the background here is a very bemused President Xi. He's seeing his global opponent making some very crass errors here, and he's just waiting and watching, and he's smiling. Somewhere in my mind, he's got a white cat sitting on his lap, which he's stroking.
Yes.
And Europe itself and European countries and Western countries generally are going to have to increasingly decide which side of the line they're going to jump. And the world will come back and form some form of new alliances and agreements. But the Western order of the last 70 odd years is going, if it hasn't already gone.
No, it certainly feels that way, and might feel worrying, might be concerning, but there will be opportunities and there will be some positives that come out of it along the way.
Yeah.
Jeremy, great to catch up as ever. and look forward to catching up and speaking again in a couple of weeks.
Okay.
Talk to you then.
Cheers for now.
Brought to you by Progressive Equity.